All right, what's going on, family? This is Paul McMillan II, and welcome to a live session. It is Monday, November 15, 2021. It's crazy, we're halfway through November now. So we're actually going to mark up NAS100. Now, before we do that, we want to check the news. And we see that today, looks like the only currencies that's going to be under some major news is the USD around 830. So that's probably going to drop or maybe be under some major news. That's probably going to play a part in the NAS100. And then in the evening time, it's going to be the Australian dollar. So let's go on ahead to our screen here. So the first thing we're going to do is we're going to mark up market structure from the 15-minute to the 4-hour time frame. Then we're going to identify the trend on the 15-minute time frame, and then we're going to locate imbalance candles and imbalances in the market and figure out exactly where price is going to head to next, depending on those imbalances, because it's going to give us an idea of what areas are medicated or what areas are not medicated, and then what areas that the banks are going to mitigate next. So I'll kind of explain that. And then we're going to plan our trades and then use the Delorean EMA cross as added confirmation to get in on the trade. All right. So what we're going to do is we're going to start on the 15-minute time frame. Okay. So we're going to go all the way back, as far back as we can. Usually we try to go back 6 months, but typically we go back until TradingView doesn't record any more price action. And I'm going to show you guys exactly what that is. So I'm going to pause this recording until I get to that point. Be right back. All right, so as you can see, I'm going to go ahead and place our vertical line here. This is as far as price action is being recorded by TradingView. And so then what we're going to do is we're going to start marking up market structure. Okay. So I'm going to start from the bottom and then the top. Now, what I like to do is I like to mark up market structure based off of imbalance moves. So for example, here, you can see, change this to yellow. You can see that there was a lot of liquidity in this area, caused an imbalance move to the upside, and then second, the uptrend, and then eventually another imbalance move up to here. So that's a good liquidity area. And then we kind of saw one here. And then we see one kind of up here. Okay. So then we're going to mark it up all the way to the top here. So we want to do it here. We're going to do it here. Kind of like right here. So then what I'm going to do next is, because we're going to get this on the 30-minute. So we're going to get that in the next time frame. So then we're going to mark up our supply demand zones based off of these horizontal lines. Okay. And then let's see, this is a good area. Yeah. So I like to mark up my supply demand zones off of the body of the candle and off of the wick. Right. So now that I did that, I'm going to change the coordinates to these, and then I'm going to resume this recording. Be right back. All right, so as you see, all of this is marked up. So now we're going to move on to the 30-minute. So let me do that now.
Hello, I am calling for Paul McMillan.
So we're going to move on to the 30-minute.
If you are interested in this job, press 1. I won't call you again today. Goodbye.
All right, so now what we're going to do is we're at the 30-minute now. So we're going to take a vertical line, and we'll kind of start like around right here. Okay. So that way it lets us know that whatever zones we draw here is the 30-minute time frame. So let's say this is kind of some good liquidity here. We're going to change this to green. Right, so this is a good one. That's a good one. Put another one right here is good as well. Put another one right here. And then right here. All right. So now what we're going to do is when I actually mark up our supply demand zones here, we're going to make these clear and green. Okay. This is a good area as well. Put one last one up here. All right, so I'm going to change the coordinates of these, then we'll move on to the 1 hour. Be right back. Okay, so we marked up, I don't know what TradingView is doing. Okay, we marked up the 30-minute time frame. So now let's move on to the 1 hour. There we go. I don't know what TradingView is doing. It's always doing something funny. So now we're going to mark up the 1 hour time frame. So we're going to put a vertical line here. And so then, same thing, we're going to take horizontal lines. Red horizontal lines. Put one here. Yeah, this is good right here. Put it on the top here. All right, so then we're going to mark the supply demand zones for these here. All right, so we went on ahead and change the coordinates on these zones. So we did that. So now we're going to move on to the 4 hour. And so you see how we marked up all this market structure all the way up until this point. Now what I'm going to do is just go all the way to the 4 hour here. And so at this point up here, price was oversold. So we know that there was a liquidity supply zone up here. Okay. So we'll put one up here for sure. Okay. All right. There's definitely one here because price came back and mitigated this area. So definitely in this area here. Okay. So now that we have this all marked up, we can go back to the 15-minute and step one is completed. So let me save this here. All right. Now we're going to go back to the 15-minute. So as you can see, we drew our zones perfectly where price is interacting with these zones very well. We can see that. See that interacted here, it interacted up here, made price go down, and then interacted here. Looks like there was a liquidity that pumped price up. So now the second step is to identify the trend. Now, when we look at current price here, we see that price did go into an uptrend here. Okay. So we see that here. Now, but we see that price is ranging. Okay. Now, what I look at, we see the last buy up to here and price hasn't really come back to mitigate this area yet. But then we also saw another liquidity point up in here. So, you know, when it comes to institutional candles and imbalances, the banks has to come back and mitigate certain areas just for the simple fact, because when they cause imbalances in the market, like these imbalanced candles, they leave a lot of previous orders open that could put them into billions or trillions of dollars in negative profit. Okay. So like a perfect example, we see that price creating an imbalance here, right? All this area all the way down to here. So when they reverse price back up, they had to bring it back up to mitigate this area here. You'll see it. They came back and got that, then brought it down, and then they came back and mitigated this area. Then eventually they came back and mitigated this area that all this imbalance of this liquidity zone created. Then eventually they brought it up to this area as well. Okay. So eventually they're going to have to bring it up to this area too, because they haven't mitigated this area. So it's clear that we can probably put even a zone here. So what we're going to do is we're going to locate the imbalances by turning on the imbalance indicator. Okay. And then we're going to draw zones based off of that. So we see that price was trending up, but price is currently in a consolidation. So my rule for trading consolidation is now I'm going to turn on my higher high and lower low strategy indicator. And so I want to see price break either one of these highs. This is probably the highest, most recent high here. And then if I want to see price break, then I probably want to see it maybe break down to here. So that's how I trade consolidation. If it's in consolidation, I like to see a break and retest. Why is that? Because that's going to give me confirmation as to whether price is going the direction I want to go, as far as the next imbalance that they're going to fill in. So that's what I'm waiting for, is price to break any one of these zones. So that way I know whether price is going to buy up and fill this imbalance that this price created, or are they going to first come down and mitigate this area that this zone created? So first of all, let me save my progress here. Let me make sure that everybody is muted. Okay, everybody's muted. So now, so let's look at the imbalances real quick and analyze this. So price is going to either do two things. It's either going to break this structure and sell, and then they're going to mitigate this area. So I'm going to actually label this, and I'm going to actually make this a liquidity zone that they're going to probably want to mitigate. Okay, and this is another liquidity zone. Matter of fact, I'll just label this liquidity zone here. Put one here. Now, ultimately, eventually, they're going to want to medicate all of this area, but they may just do 50% and bring price up and then do whatever they want to do. Or if price breaks this area, they're going to want to medicate all this area that this created. So I'm just going to level all these imbalances with the horizontal lines. And then ultimately up here, I'm drawing a zone. And here's why. Because this created a lot of imbalance. So there was a buy candle. There was a buy candle up in here. So the banks did put in a buy sell, but then also put in, put in the buy order, but then also put in the sell order. So this sell order, even though they got mass profit off of this, but that buy order is in some huge negative profit. So they're going to have to buy into this area in order to close off that order and be in profit again. So they're going to have to mitigate this area as well, but they're going to also have to medicate this area. So this is what I do. So my thought process is, it looks like it's buying up, but I'm not going to jump on that yet. So my thought process is price is either going to break and retest down here and get down to this medication zone. So that way they can, close off this buy order here. I mean, some of these sell orders here that they weren't able to close in the beginning, or they're just going to buy price up to mitigate all this area and create an all-time high, make price overbought, and then eventually bring price all the way down to mitigate this area. It's either or. So with that being said, so the next thing I like to do is, I like to go ahead and start planning my trades. So what I do is I go ahead, because I see there's a lot of liquidity in this area. That's why price is consolidating. Okay. So, I'm going to actually put out my risk reward tool so that way I could plan my trades. So if price sells, then I'm looking forward to bust this, and this could be the first take profit. So I'm going to label it and then make this the second take profit. Ultimately, if it sells. And then stop losses up here. Now, it look like they're trying to buy it up, but I'm waiting until 9:30. There's a reason why, because indices start busting wide open at 9:30. So I need to know for sure where it's going to go, because I don't want to get caught no fake out. So that's going to be the sell, and then I'm going to set up the buy. Now, price did close above this, but I'm waiting for the fake. I'm waiting for the 9:30. So stop loss is going to be there, and I'm looking for this to be the first take profit. Now, if it goes past this point, it's definitely a good take profit zone for one. So take profit one here, and then I'm looking for them to at least mitigate this area, at least hit that. So I'll probably just put my second take profit right up in here somewhere. So yeah, this is the second one. And so this is going to be take profit. Let me see, take profit one, 375 plus pips. And this one's going to be 140 plus. Then when we deal with this one, let me see, it goes all the way down to here, which I really don't need that much, but I'll do it anyway. Matter of fact, you know what I'm going to do? I'm bring this up to where I can get at least 200. This is decent. What does it say? 400 plus. Then if they happen to go down to this area, then we'll take that. So let's see, over 1,000. I take that back. That's over 1,200. 1,200 plus pips. Okay. So that's how we're going to do that. Now, very next thing I'm going to do, looks like this thing is trying to buy up, but see, it's not even 9:30 yet. So I ain't even going to touch it. I'm not going to do it because price could still fake you out and drop. Happens all the time. So next thing I'm going to do is actually set my alerts. Then we're going to turn on the Delorean EMA indicator and then wait for a good sniper entry on the EMA cross at the 9:30 bell. Well, price is clear on where it wants to go. So let me see here. So the most recent support. So we're going to set that here. Shoot. It says close most recent resistance. Shoot. Come on, man. Copy and paste all that right now. I don't want to trouble out this stupid computer. All right, so that's copied. Now, let me do this. Smash TP1, 200 plus pips. Yeah, I just set that for each. Take profit zone. Now, it look like price is trying to buy up, but I'm waiting for that bell. I'm waiting for that bell. I know how price acts, and it's not going to get me unless I know for sure. Let's see, crossing down. Let's see. And then I want to do the same thing for up here. TP2, and then this is like 940 plus. Let's see, 940 plus. This is 375 plus. So that's what I'm just pretty much doing. Let's see, 370. Well, I can leave it at 200 plus. That's fine. Then I'll just leave it that way. And then the next thing is that I'm going to turn on the Delorean EMA indicator. Now we do have a cross here. Now typically with this indicator, 9 times out of 10, when the yellow EMA crosses the red EMA, it is signs of a strong trend. But we use this as last confirmation because we still want to look at structure, institutional structure, okay? And then if that conforms with the EMA cross, then that's a solid entry and a solid, trade to get in. Now, me personally, at the 930 bell, now we can see on the RSI prices trending up. So realistically, could we have gotten this trade and made a bag already? Yeah. But at this point, I'm not going to jump in. I need added confirmation that it's going to have a strong enough trend to bust all the way up to here. Now, if at 930 bell, it's clear that it's going to go that direction, then I'll jump in. But it's not 930 yet. Because see, the biggest thing you want to avoid as a trader is the fake out. Because price could easily bump all the way up and then all of a sudden start to retrace back down, form a banker's candle, and then pop. And now you're in negative. So we want to avoid that as much as possible. So what I'm going to do now at this point is basically pause this recording and wait for the 930 bell. Then when it's clear on exactly where price is going to go, the price is going to buy up, then I can click here, paste in my stop loss and take profit, and then hit the buy button, and then vice versa. If price decides to sell, then I have a stop loss and take profit ready to execute the trade. And then we'll see exactly which area that price decides to mitigate. And I really believe that it's a possibility that they could at least mitigate 50% of this area, maybe down to here, because there was a last sell candle, then a buy up. So, I mean, this could be a liquidity area as well. They could bring price down to hit this liquidity area just to mitigate 50% of that and then buy it up. Or they might just go ahead and just buy it all the way up to fill this area and mitigate all that before ultimately selling it down after the price is overbought. But we need to know for sure. Important thing is that we have an idea of where it might end up. So I'm just going to pause this recording again. We're going to wait for the 930 bell. So we got over an hour. So I'm just going to pause this recording until we get there. All right. So stay tuned. All right. So to give you guys an update, we have about a little bit over 15 minutes, really about 16 minutes until the bell, 930 bell rings. And that's when the liquidity is going to really pick up. Looks like that price has kind of shifted already. It might mitigate maybe 50% in this area, at least. Then maybe pull it back and then push it down even further. I'm thinking this is going to sell, but we'll know for sure at 930 in which area, which way it goes. So we'll just wait to see then. So I'll be right back. All right, so we're getting close to 930. So we're going to see what the next candles do. They could mitigate this area. I could see that. Or they can start to mitigate this area and then buy it up all the way up to here. Go either way. So we want to see what price decides to do. But ultimately on the RSI, it looks like price is trending down. So we'll see. What I'll probably go ahead and do is just maybe draw a trend line here. It's more likely price probably trending down. We'll see. Let's wait until the 930 bell. See what pops.
Get it.
So the bell rung. Looks like it might be dropping, but let's see. Yeah, 29 in profit. Yeah, $50 in profit. Let me go ahead and modify, let's see, 0.04, 60 some dollars in profit, so 55. First partial trade, $57. Now I'm about to move down my stop loss to at least, let me see. Now it's going back a little bit. Let me wait. Let me put at least to here. So that way, if it hits it, modify stop loss. Where's that 16237? 16237.9. So now it's modified. Now I'm going to bring it closer. Yeah, it's dropping. Loving it. Loving it. Loving it. Let me see. 162. Nah, not yet. It's pushing back. Let it hit my stop loss and to do that. You know what? Let me just close it. Because I don't want to get into no negative. So $58 profit from that.
Boom.
And it almost actually hit my first take profit right there. It almost hit it. $58 profit.
What's your lot size looking like?
Oh, I did 0.05. But had I did what am I thinking? If I had did $2 per pip, that would have definitely been a $250 profit.
Ooh.
But
Ooh.
I want to see price drop a little bit more. I think it's going to drop though ultimately. Let me pause this recording. Then if it drops more past this point, it keeps on going, then I'll resume this recording. All right, so at this point, I did make my profit. Price almost hit my first take profit. So it was about the $58 I made here, just for the simple fact because I'm starting at a very small, decent lot size, just to kind of, you know, experiment. But it's a possibility they could medicate 50% of this, maybe a little bit of this, maybe drop it down further, or they could buy it up. So we'll see what the next move is. I might jump in for a second position, or I might just take my profits for the day, but we'll see. Hey guys, just want to point something out. So price ended up hitting the zone. It may not be done. They may try to fill this imbalance here, make price oversold, and then ultimately bring it up, or they might just decide to reverse it and bring it up. But you can see this was a huge impulsive move. So we did it. So I'm officially wrap it up. See you guys later.